Hey, good morning. Tony LaPorta here with NakedTrader.com. Okay, we'll try this again. I've got a lot on my mind and only, 4 to 7 minutes to get it out. So we'll see how she goes this morning. Before we start, the Thursday before payrolls for me, and I was a bond trader, was the least favorite trading day of the month for me. I always, historically, the bond markets tend to close mid-range due to the fact that the longs and shorts, the longs buy into weakness to lighten up before non-farm payrolls. The shorts, the longs, the whatever. The shorts buy into weakness, the longs sell into strength. So today should be treated, if you're trading the treasuries, as a correction day. Buy them when they look their worst, sell them when they look their best. Speaking of that, if you're not on George Cavaligos's email list, you're ripping yourself off. And George sent out an email this morning stating that same thing about looking for a correction style trade, buying when they look their worst, selling when they look their best. As for my service, if you're not subscribing, you're also ripping yourself off. I always used to like to say that though my service costs less than parking, and I was just in Chicago this week, or last week, shall we say, and for 3 hours parking was $27. Another time, 4 hours parking, $30. It's not that expensive, okay? It's not even close. So, like I said, this is 30 some years of experience. A lot of people don't like other people's point of view. They have their own style. So I will leave that with you. What I am going to speak about this morning is I wrote a Treasury bearish commentary last night. And when I wake up this morning, I see the bonds are a half point higher. They're only 4 to 5 ticks higher now. But at that point, you wake up and you go, what is going on? I can't figure this out. And then I read George Cavaligos's email this morning, and he's gotten a little bit chopped up as well this week. And all of a sudden, 32 years, the light goes on. It's like, well, I haven't been able to figure out rollover for 32 years. Well, I think I'm going to figure it out now. The lead month now in the treasuries is December. We've just spent the last 4 or 5 days rolling over, and rollover sucks. It always has sucked. I've always lost money during rollover. Fortunately, I haven't been trading. I will walk into work next week, and I told myself I'm actually not going to trade until rollover is complete. Obviously, next week we will find the S&Ps rolling over. So I just may sit on the sidelines for a while, or just dabble back in with some very, very small positions and see how it goes. So that's about it really for me. Today I'm still I want to sell the bonds and the indices. So we will see how that works out. It probably won't work out, but it's the Thursday before payrolls, and I would say that 90% of the big money is still on holiday, and they are not going to be trading. If you think yesterday was difficult, watching the Dow all over the shop, up 150, down 30, and then up 50 at the end of the day, today and tomorrow will be even more difficult, I feel. So don't lose your ass. I believe the real markets start again after the rollover in the S&Ps. So that's about all I have. Tony LaPorta with NakedTrader.com signing off. I'm headed for the Twin Cities and very much looking forward to a nice holiday weekend. I'm also seeing my daughter who lives in Minneapolis and my son who lives in St. Cloud, bringing them a few presents I brought with me from Chicago. You don't want to know what my presents are. They're not flowers. Cheers.